Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. We're taking a look at the markets as we are midway through this shortened week, this first week of September. It ends with a bang because we've got non-farm payroll on Friday, and we're getting closer and closer. We're now 2 weeks out from what is widely expected to be the first quarter point rate cut from the Federal Reserve, something that was anticipated as early as March or May of this year, and we're now going to get at the September meeting. Expectations are pretty much fully discounted for a quarter point cut at every meeting, at every scheduled meeting between now and June of next year. So that's a fairly ambitious track, and we'll know at the end of the month whether or not the Federal Reserve is going to stick with their data dependence tact. Now, in the meantime, I know, Rog, what's going on with the S&P? We're getting rate cuts. The election cycle is usually bullish. What's going on with the sell-off yesterday? Here's the way I look at any sell-off. Now, take the speed of the candle out of the equation. We're not talking about a day trade or a swing trade. The easiest way for me to kind of keep my bearings is look at the current range or look at the recent range that we were in. If I take a look at, say, the low from the 16th, to the high, and I kind of just grab a range. It could be the range for all of August. It could be the range for whatever, but that seems to be where price action was bouncing around. And yeah, we suddenly went from one end to the other, and that's what gets the attention. But is this a calamitous drop? And then when you step back and really look at the year, no. I mean, we've been chopping around since that I should say, mid-July, but most definitely early August yen and carry trade unwind. But we're just chopping around here. And it could be a little bit of wait and see. One thing that I find very optimistic, and I think I've mentioned this just a couple of times, but it bears repeating, is when I did listen in on a few of the conference calls or replays later on, one thing that was distinctly missing from a lot of the commentary was the recession word. One thing we did hear a lot of, especially from tech, Magnificent Seven, was more investment, CapEx spending. And that really isn't something that, again, just from a very surface level, is this something that's going to be significantly bearish? Well, the NAS hasn't been as strong in its recovery because when the NASDAQ rolled over mid-July into early August, it too suffered that same yen carry unwind pressure. But when it bounced, it didn't bounce as much as, say, the Dow or the S&P. And that's something to keep in mind. So that tells us under the hood, something different is going on, right? There's a whole different set of things going on under the hood with the Dow as opposed to the NASDAQ. And what's the difference? Well, it's really simple. What is the Dow weighted like? Is it weighted like the NASDAQ? They share the XLK in common, right? We know this. They share the XLK in common. So this is Apple, this is NVIDIA, this is Microsoft. This was that very well spoke about. A lot of folks talked about what a big deal it was, where in the XLK, they swapped NVIDIA for Apple basically in weighting, because it was basically 20% Microsoft, 20% Apple, and 5% NVIDIA. So they said, oh, everybody wants to talk about NVIDIA. Let's make our ETF much more appealing to those folks that want NVIDIA exposure. We'll make Apple the 5% and we'll make NVIDIA the 20%. And I thought to myself, gosh, if there's ever sort of a topping, right, this ETF has now decided to weight in favor of NVIDIA, we can, I just kind of look at this and sort of chuckle. It could have left well enough alone, but this is where we have to remember that these folks who make and sell ETFs still are trying to, make it alluring to traders who say, look, NVIDIA is the hottest stock, the most important stock in the world. And that's really where a lot of traders are going to get hurt. It's a stock. gang. It has weighting in much the same way that Apple or Microsoft would have in the broader averages and in the XLK. NVIDIA does obviously happen to take a huge part of the percentage of semiconductors, as we would expect they would, followed by Taiwan Semi. But when we do this, and I'm going to go back to what we've been talking about so much, you look under the hood, why is Dow and the S&P up? Healthcare, financials, right? If you look at where the resilience is, it's not in the Magnificent Seven. So really, this constant barrage we get of what are one of the magnificent stocks going to do next? That's the lesser of who cares, right? Until SMH and XLK start to keep pace with the likes of financials and healthcare and gold miners, it's just not where the flow is. It's not where the follow through is either. And if we get this part of our trading wrong, if we direct ourselves at stocks that aren't likely to move, if you think about 3 steps to any kind of account growth, what are we trading? How much are we trading? And how much are we risking? And there's a formula to all that. There's a formula. There's a very repeatable process to watch this building. There's a very repeatable formula to position sizing. And there's also a very repeatable formula to risk management. You put all those 3 together, those are the things that we look at for account growth, which is what all of us want, whether that be small account growth, medium-sized account growth, large account growth. We all need to look at the things that have the best probability to follow through. And we're going to continue to focus on things that have been relative outperformers, and those things just happen to be more weighted in the Dow and the S&P. So this is where, for now, and at least between now and probably next week, let's get through non-farm, I would say leave the indices, be very cautious, leave the indices alone. I'm sure a lot of people went bottom picking in the S&P yesterday, or the NASDAQ for that matter. And rather than doing that, a simple understanding of watch list building would say, well, what are components within the S&P that are outperformers? What has a better chance potentially of being resilient in this selling pressure that we had throughout Tuesday? And that's where, again, you can look at different names that could have pulled back. Now, I'll tell you, look at Johnson & Johnson. So this is where we kind of take the next step of, we don't want to use the word the market. I know most people mean the S&P, but the problem is, if we look at the market and we limit it to the S&P, folks aren't even doing that part right, because they're still sort of maybe saying the market is the Magnificent Seven. So let's ditch that. It's really meaningless. There are treasuries, currencies, energies, metals, indices, commodities, meaning softs and grains and meats. They're all markets, right? When we take a look at healthcare, we take a look at the healthcare sector. It's an outperformer. And Johnson & Johnson, someone forgot to give Johnson & Johnson the memo that we're supposed to melt down. This is what relative performance looks like. This is why, if there are dips to be bought, look at Johnson & Johnson, Visa. Someone forgot to tell Visa they were supposed to sell off yesterday too. So I don't want to trade things going in a different direction than the broader averages. Right now, I'd say the broader averages are in just a lot of chop. Is it bullish chop? No. Is it bearish chop? No, it's neutral right now. And you might say, Rog, but we had a big down day. Markets can move up and not meaningfully do so. In fact, if we rally to 5,700, is that bullish? No, it's still chop. It might be bullish chop, but it's still chop. If we head down to 55, is that chop? Probably. We could call it bearish chop, but it's still chop. And that's why I color code my candles. It keeps me from thinking from the perspective of, if we're looking at the S&P in a daily time frame, and I want to get an idea of the direction, participation, momentum, sentiment of what's happening, by color coding the candles, I've got a pretty good, and for me, reliable way of saying, hey, green means bullish participation, bullish price action. Yellow is neutral, and red is bearish. And then there's a shade of each. So I can get that traditional Japanese candlestick interpretation of a down day, dark green, or an up day, light green, right? So this dark red, light red, and also that darker and lighter yellow. But aside from that, If I see that there's chop on the daily, this is a really easy adjustment. Just shorten the time frame. If you're uncertain about what happens next, shorten the time frame. If you're not seeing trends in terms of expectation of follow through, shorten the time frame, because shortening the time frame will then give us a shorter time horizon, right? So let's take a look at a few stocks that have come up in our chat window. And these are really easy adjustments to make, gang. If you check out yesterday's free video, I shared with you all some of the things that we're doing in the mastery right now. How did August go in a month where there was so much volatility? How did we do? And it's really the same focus we're talking about here. What were the outperforming sectors and stocks? Most of August was staples and healthcare, more staples. We did some gold, utilities. Right. So most of August was exactly what I'm recommending going into September. Where's the relative performance? Focus on that. Right. Okay. So yeah, Coke. So we have long positions in Coke in the mastery, as well as Pepsi. We have a long position in Pepsi right now. Altria and Joe, yeah, to your question, Altria and Philip Morris have been outperformers. And interestingly enough, they share the one big thing in common, which is they're part of the staples. And we want to keep an eye on consumer discretionary too, only because there is so much emphasis. I'm just looking at another screen here, gang. There is so much emphasis on the retail, the customer behavior. I'm not saying there's going to be opportunity here per se, although Nike, Lowe's, McDonald's, Starbucks. So yeah, Nike might get a little bit more attention. This is far longer term, but the 13Fs came out just, a couple weeks ago. And it shows that Bill Ackman's kind of backing the truck up with Nike. And I don't know how much of that is some of the strength we're seeing, but the 13Fs came out. That's another look at flow, but that's a far longer term view. But I'd keep an eye on Staples, obviously a very big outperformer, but I'd keep an eye on the retail behavior and keep an eye on XLY for maybe something that's up and coming through September, as opposed to very established trends that we've been trading for the better part of 6 weeks in the Sector Secrets Mastery, utility staples. Let's keep healthcare and financials, as we mentioned, up on that list as well. Let's see. Microsoft on the daily. So two things. I won't buy trends that are down or bearish. And I don't use head and shoulders patterns, my friends. So it's just not a pattern that I use. However, what I'll say is Microsoft is still very much a red candle in the gold zone. Let's let a bearish candle, bearish participation, rally into the gold zone, which is that resistance level based on historical volatility. And for now, Microsoft can only be where, zones like this are long puts, long puts, long puts. So red candles in this gold zone, that's it. That's all I need. That's all that the setup for me is. I don't use chart patterns though. And just so everyone goes, Rog, you don't look at head and shoulders? Not at all. I don't use chart patterns at all. Price patterns are different, completely different, and they're much smaller. They're much more compact. There may be 2, 3, maybe 4 candle patterns. But what I do like is things like the volatility zone and understanding that gold and red are going to be a good combination for where resistance could be. And you can see the last 3 touches back on the 22nd, on the 29th, and on the 3rd, very much a long put when the red candle is up in that gold zone. All right. Based on my criteria, what are my thoughts on American Express to the long side? So, Chris, it is actually one of the relative outperformers in financials. The biggest thing is whether or not there is liquidity sufficient at the strikes that I would want for AXP, say September 20. One thing you're going to find is they tend to kind of glom to 250, 260, the round 240. So that's going to be one challenge. But 250 is in play, and there's certainly sufficient volume at the 250 call, September 20. It's a green candle meets the gray zone. It's on a trend. but it has very consistently been a green candle environment since the middle of August. And we definitely would want to keep an eye on that. So yeah, my criteria would be consistent green candles, preferably a trend, and then where the green candle meets the gray zone. Yeah. Bob asks, what's the short-term support level for NVIDIA? Will it break below 100? Thoughts on December 100 in the money long calls. So, Bob, I don't know where it's going as far as where it'll be in December. I don't ever want to presume I'm going to know where something's going and on a particular date. And guess what? Nobody does. So I'm not going to ever put myself through that. But what I will do, to your question, is look at where support and resistance may be. NVIDIA now has a red candle. And that means that I can't buy it. I don't want to look at calls. I don't want to look at the long side. However, if you've got a longer time horizon, which it seems that you do, right? So let's do this. Let's bring the weekly in. Okay. If you're looking for a level for NVIDIA, I think someone had asked me this yesterday as well. Here and basically down in, I would keep an eye on this area here and down in there. These are all different support levels on the weekly time frame. So this chart here is the weekly chart. And if you're looking for something where the time horizon is September to December, I'd probably look less on the daily and more on the weekly, and then find out within the context of what is pretty bullish action. We had an uptrend back in here. I'd call this bullish chop now. But if we pull back to any one of these support levels, this is very aggressive here. I would call this moderate. I would call this conservative. If you're looking at where it could bounce, that's the way I would look at it. As to where it's going to bounce, it's any one of those three levels that I would, if someone said, okay, Rog, where do you think NVIDIA is going to bounce from? Either current levels closer to about 97, or levels closer to about 92. And that's where I would presume it's going to find support at. Does it get down there? Again, once I've got to go into predicting where something's going to go, I'm in big trouble. So does it get down there? I don't know. But remember, we're counter punchers as traders. So we're waiting for the market to throw a punch, and then we'll decide what it is we want to do. If you want to use another analogy, the market is the pitcher. We are the batter. And I know the market's going to throw something my way, right? But I don't know what. And once it gets there, then I'll decide whether or not I want to take a swing at it or not. So that's the way I'd look at NVIDIA. If you're looking at that long a time horizon, yeah, pull it out to the weekly. But, I'd be remiss in saying this. If NVIDIA's pullbacks are great buying opportunities, then the week of the August 5, that sell-off, that was really just gold, right? That was a weekly mean reversion. And so any kind of revisit to that area would be a great longer term type buy and hold of shares or leaps or whatever it is that you might want to do to the long side. But in the meantime, if I near term care about what NVIDIA is doing, it's an opportunity cost. I see just so many folks just talking about where NVIDIA is going next. And that's fine, but only if you're already looking at things like Visa, only if you're already looking at things like JP Morgan and financials and Johnson & Johnson. And so what NVIDIA right now looks to me when I see the different conversations happening, it's an opportunity cost. Folks are focused on that and not on the things that are moving. So I just would be remiss if I didn't say, hey, what are we looking at? And does it have the possibility of follow through, as opposed to what do we think is important versus what right now we're seeing follow through in healthcare, financials, staples, utilities, even gold, although gold's a little bit wobbly. That's where the strength has been. That's where the follow through has been. And that's where my attention has been. And when that stops, if at some point the structure changes around NVIDIA or Microsoft or whatever, Apple, and they're hitting zones in ways that we have it on the watch list with expectations, high expectations of follow through, like we do for Coke, like we have had for Newmont Mining and gold, like we have for Pepsi. When it gets into that category, it'll be on the watch list. But for now, putting things on the watch list that aren't necessarily going to move in the direction that we want them to, that's an opportunity cost. And I see a lot of folks suffering with that right now. Okay, gang, That's a wrap. Another dreary day in South Florida. Hope the weather's better wherever you are. I'll see you tomorrow, same time, same station. Be good to each other. I'll talk with you soon.